Welcome guys. Today we'll be focusing on the strategy that we use to trade NAS 100. This strategy, I call it NAS 100 buy strategy. We're only looking to buy because if you can check, Nasdaq has been on a uptrend since it started, so we're only looking for buying opportunities than selling opportunities. So with this strategy, what do we need? We need to put a trend line which indicate that we are buying. So we put our weekly trend line. So when price touch the trend line, we're looking for buys. We look for a buying opportunity when price touch our trend line. So this is our weekly trend line. It gave us first touch and it gave us another touch. It gave us two touches. So when price touch our trend line, we're looking for buying opportunities. So from our weekly time frame, we go to our daily. So first thing, we put our weekly time frame. From weekly time frame, we go to our daily, and on daily we also put another supporting trend line. That's what we all need so far. It's only weekly trend line and daily supporting trend line, because we're looking for buying opportunities. That's why we're putting a supporting trend line. So when price touch our daily trend line, we look for buying opportunity, buying opportunity, buying opportunity. So each time price touch the trend line, our daily, we look for buying opportunity, we look for buying opportunity. So what's actually happening? We don't just buy if price is in the middle of nowhere. We wait for a price to do what? To touch our weekly trend line or our daily trend line. If price is around here, we don't buy. We wait for price to come to our trend line. That's when we can start looking for buying opportunity. And our trend line, we don't need a trend line that is newly formed, like we just put a trend line here. We need trend line that is visible from weekly and daily and is being tested way back before, not a newly formed trend line. We want trend line that is tested way back before. So that's what we need. So let's look what's happening when the price touch our trend line. So we want price to be on a bullish market, and it must exhaust and go to a bearish market, give us a pullback and go to touch our trend line. Once it touch our trend line, we wait for price to respect the trend line, to move away from the trend line, retest, and we go up. So if you have been trading, you can see this as a inverse head and shoulder pattern, but it is with a slanted neckline. The neckline of this inverse head and shoulder is more like a decreasing neckline. This is the neckline. If you can check, let's use, we have a left shoulder here, we have our head, we have our right shoulder. This is the pattern that we need. So we see this pattern on a bigger time frame. So we say each time price touch our daily time frame or weekly time frame, we want price to give us a inverse head and shoulder pattern. We want price to give us our head and shoulder pattern. So remember, I said the price must be on a bullish market and must exhaust to a bearish market, give us a pullback and touch our trend line, move away from the trend line, retest and shoot up. Let's see if we do have that inverse head and shoulder. So we can see this is our bullish market, and price did exhaust, went down to form the left shoulder. It went to touch the trend line. So once it touched our trend line, this is how we look at left and put our right, our support, looking at left. Once price is on our supporting trend line and we say we want price to move away from the trend line, come and retest our zone to complete the right shoulder. Once it touch our zone, we enter from here and we target the beginning of our bearish market. So we enter and we target beginning of our bearish market. So guys, we have seen this pattern playing out from weekly, 2 times from daily. We have seen it playing out here on the touch of a weekly, and now it's playing out again. So you can see this pattern is a very powerful pattern. Even if we can check here, we'll say we have a inverse head and shoulder, but it's not quite clear. This is our bullish market, here's our bearish market, but the left shoulder is not well formed. The left shoulder is not well formed. Here is the touch on our trend line. That's what we need. Once market touch our trend line, we don't enter, we put our zone looking at left to right, and we say price must move away from our trend line. Price must move away from our trend line. What I'm doing now. We say okay, price must move away from our trend line, come and retest our zone, and once it gives us that retest on our zone, we enter. We don't look at candlestick patterns or anything else. We enter once price touch our zone as a completion of a right shoulder. And our target, it doesn't change. Our target is the beginning here. So if price continue going up, we're gonna miss because we don't take everything. We just take our target and we simply go out. We go out once it gives us the ratio that we want. So let's check again when we have the touch on the trend line. Remember, we say market must be on a bullish market. It must exhaust to a bearish market, give us a pullback. Once it gives us this pullback, we now know that we do what? We put our zone looking at left, and we say price must go to touch our trend line. Once it gave us the touch on the trend line, our next rule is that it must move away, retest our zone. Once it gives us that retest, we enter long and we target the beginning of our bearish market. So remember, our rule is that market must be on a bullish market. It must exhaust, give us a slight pullback, go and touch the trend line. So once we have the touch on the trend line, what do? We put our zone looking at left, and we say price must move away from our zone, come and retest. And once it give us that retest, we enter long and target the beginning of our bearish market. That's how simple the strategy it is. Even price continue going up, we're not looking at that. So even if here we can see we have a touch, but it's not fully touched. So but our first rule is that price must be on a bullish market and it must exhaust. So once you see this bullish market and you see price exhausting, you already know what's gonna happen next. So we say from here you're expecting a pullback. This is the confirmation that you use. Once you have this pullback, you put your zone. And you expect price to go break your zone to touch the trend line. From the trend line, you're expecting price to break your zone and retest. After it retests, we going long. But here what happened? We didn't have that inverse head and shoulder. We had a double bottom. So I can say here we did miss the trade because our pattern, it was not fully formed. So let's see. Our first rule is that price must be on a bullish market. Our first rule is being met, and we say price must exhaust. We can to a bearish market. This is our bearish market, and from here we say price must give us a pullback, and we can see here. Let me just try to remove some of this drawing. We can say, okay, we're this bearish market, we have a pullback. So once we see this pullback, what we do, we put our zone. And we say what must happen. Price must go down, retest to touch our trend line. We have a touch on our trend line. So what was our next rule? We're expecting price to move away and retest, and we go low, but that didn't happen, so we didn't have a trade. So that's why at most cases people start blowing the account, because they saw from long time this support trend line is being respected. So once price came here, they say, no, I know from here I can just go long because it's been respecting this trend line. And check what happened. Like the minute you don't follow your rules, this is what's happening. So we saw this pattern playing out on a daily. Let's check what's happening. Let me just remove this one. Okay, now it's at current market. You see at current market is touching out what our weekly trend line. It's touching our weekly trend line. So from here I can say, okay, we have a touch on our trend line. Let me put our zone looking at left. So I will consider this as our left shoulder. This is our head, and we say price must move away from our trend line, come and retest our zone. So from here at current market, we're still expecting to take an entry. From here. Only once price come and retest here, we're gonna take our entry, and we might target here. This is what we're expecting on our current market. Okay guys, let's go on 4 hour, because we've seen this pattern happening on a bigger time frame, and you know something that you see on a bigger time frame is high probability than something that you see on a smaller time frame. So let me just put our weekly trend line, and we go on our daily. We put our daily trend line, so now we're gonna look on 4 hour, what's happening on 4 hour, because I know some of us on a daily it takes a lot of time and many days the pattern to be fully formed. So I know we might look for smaller time frame so we can trade on smaller time frame. As we can see, we had that bullish market and we had a bearish market, and it went to touch our trend line. So for me, we say we're expecting price to pull back and retest our zone and we go up. Remember on daily, this pattern I said the neckline, it was a decreasing neckline. But if you can check, if you can zoom carefully here and we focus and we put our focus here, we can say this part here is our left shoulder, sorry. We can say here we have our left shoulder. So like once you start to train your eyes to see this pattern, you will be able to spot them. Even those one they seems invisible, you will be able to spot them. We can consider this as our left shoulder, we can consider this as our head, and we can take our right shoulder from here. We can have our right shoulder here. I hope guys it makes sense as it does to me. But once you start to train your eyes, so once we have that touch on the trend line, what do? We put our zone looking at left. We put our zone looking at left, and we say we expect price to move from our trend line, retest our zone, and once it give us that retest, we enter and we target around here. This is our target. So we've seen this pattern playing out on a bigger time frame, even on a smaller time frame. So when price continue going up, remember we don't just put trend line, we only have focus on trend line that is formed on weekly and daily. So price continue going up. Here is our on a daily, even if I can say on a 4 hour, if we can drag this down, I think it might give us a touch, but we'll just focus here. Okay, this is our bullish market. Price did exhaust, went down, give us a left shoulder. Once we have that left shoulder, we put our zone. We put our zone from here, and we say price must go to touch our trend line. From the trend line, it must go retest our zone, and from our zone we enter. This is how we've been looking from daily, but let's see what's happening on a 4 hour. 4 hour is giving us something new. 4 hour is giving us something new. Instead of price breaking our our resistance zone to give us a retest. What did price do? It gave us a double bottom. It gave us a double bottom. So now we know, okay, if price doesn't break our zone, we will expect a double bottom. So now we have inverse head and shoulder and we have a double bottom. And you remember on a daily we did see one double bottom. So the double bottom is now appearing again on a 4 hour. So you see now our head on a 4 hour is a double bottom. Our head on a 4 hour is a double bottom. This is our left shoulder. Let me use this. This is our left shoulder. This is our head. And this is our right shoulder. But you see there, right? The head is a double bottom. So this is something we need to put on into our consideration. Okay, that when price touch the trend line on a 4 hour, it might give us a double bottom before it starts shooting up. Okay, let me remove this head and shoulder. So guys, I know most we've been taught that if you're trading inverse head and shoulder or head and shoulder, you must wait to put your neckline, and you wait for price to break your neckline and retest your neckline. That's where you're going up. But on this, we don't wait for a break of a neckline. We enter immediately when it goes to our right shoulder. That's when we make an entry. Let's see, here's our bullish market. Price exhaust. Okay, here we can say we have a zone here. Looking at this, so once price went down to touch our trend line, we said, okay, previously we remember price didn't break, it gave us a double bottom first before it start breaking our zone. And you can see even here it's still giving us that double bottom. So we say, okay, on a 4 hour, price must give us a double bottom. On a 4 hour, price must give us a double bottom. If you can check, this one is also not a perfect shoulder. We can take this also as a left shoulder here. Our head, double bottom, and this one candlestick, we can take it as a retest. But sometimes it won't be picture perfect as we expect it to be. Sometimes it won't be that picture perfect. This one was the right shoulder where we could have taken our entry. But once you start to train your eyes, you'll be able to notice this pattern more easily. So with this, guys, you can see it needs someone who's patient enough. It doesn't need someone who's gonna scalp. Just need someone who's patient enough. So this one, it didn't give us the clear touch. But the minute you start to train your eyes, you will see. Okay, here Okay, on a 4 hour, it giving us a lot of this pattern. I can take this as a left shoulder, touch on our trend line. So once it touch our trend line, we put our zone, and we say on a 4 hour, price must give us a double bottom before it goes break our zone and we enter. So I know someone can say, okay, we already, because we have so many confirmation of, okay, price is touching this trend line, supporting trend line, and we have a double bottom. Why don't we enter immediately here? Why don't we enter immediately here when it's giving us a double bottom? So remember, like, I will make video of the pattern. Sometimes when prices here, even if you know how to trade the pattern, you must wait for a neckline. Here's the neckline of this pattern. You're gonna enter when it breaks here. So because it's another confirmation, because if it doesn't break, it can still play here. So this will be impulse, and it will make a, this will be impulse, and this will be a correction. Then it can continue to go to the downside. So that's why we have to wait for price to break here and give us a retest. That's another confirmation that, okay, price is not going to the downside, is continuing to the upside. So but I know sometimes once you start trading, you become a little bit aggressive and you take early entries. But now we're just focusing on this, like, maybe the more you become experienced, then that's when you will take those early entries. So you can see, guys, we have a bullish market and price came down. From here we're gonna put our zone. From here we can say this is the start of the left shoulder, and it went down again, give us a retest. But I think it's much easier if we take this as a shoulder, because it's near our trend line. It's near our trend line, and this is our head shoulder. This is our head, and remember, our head must give us on a 4 hour a double bottom before we can start shooting up and retest. As guys, we can see we have that double bottom. Let me remove these drawings. You can see we have that double bottom. We have that double bottom, and what we do, we take entry from here, and we go up. This is our target. This is our target. So what happened? It didn't respect the setup. It went to stop us out again, to touch the trend line before it can start shooting up. You can see after it touched the trend line, it went and give us a little bit of retest and started shooting up. So now I will say it's the first time we took a loss. So we can see, okay, on a 4 hour, the trend line, the double bottom, this is our double bottom. So we can say double bottom must touch the trend line again. And remember when I said on a previous analysis, I showed you, like, if we trade the pattern, it must break the neckline. it must break the neckline. We can say this is the neckline. This is what's gonna be an entry when on the break of a neckline, looking at this W pattern. But this one is a high probability because we have inverse head and shoulder, and we also have a W pattern, which is a reversal pattern, and we also have a double bottom. If we can check from here, we can say this is our left shoulder, this double bottom is our head, and this is our right shoulder. Okay, you see, this is our left shoulder here. This double bottom is our head. This retest here on the neckline is our right shoulder, where we normally enter. So now, oh, my chart is a bit messy. Now, guys, I want to show you something. Let me just quickly remove all this. Yeah. So we can say, okay, now when price give us a retest here, we normally enter. So now we become more cautious. We say, okay, if we enter here, we're expecting price to go down, but we saw, okay, it doesn't simple go down. The double bottom, it can either stop us out. It's either we put our stop loss a bit wider below our head or outside the trend line, or we say, okay, what we can simply do, if we don't want to put a wild stop loss, when it stops us out, what can we do? Because we don't want to miss out, we can say, if it stops us out, we'll wait for another entry when it touch the trend line. So this is us putting the possibility to say, okay, if it stop us out here, we'll wait for it to go touch the trend line and we'll take. And this one, the risk to reward ratio increase. It's either if we put our stop loss below the head, depending on our account size, or below this trend line. So once it breaks the trend line, we know it has invalidated our setup. So it's either from here we make two entries. We say we don't want to miss. We'll enter at retest here, and we put our stop loss wild, or we keep our stop loss simple, and we'll put a buy limit on our trend line. Let's continue and see. Let me remove this one. I know someone say, I want to capture the whole move. So like the minute you start to be experienced, you know like how to drill your stop loss, everything. But now we're just focusing here. I don't want to confuse you guys with many things. I just wanted to keep it simple. Okay, here is our bearish market, and this is our shoulder, left shoulder, and this is our head, and this is our head here. So you know, sometimes the head doesn't fully touch. So once we have this left shoulder, what do? We put our zone looking at left shoulder, and once market breaks that to touch the trend line, we say, okay, we wait for price to go and retest, then we can enter and go long, or we gonna put a buy stop here and we enter long. But we know that on a 4-hour, Nasdaq must give us a double a double bottom. And as you can see guys, we do have that double bottom here. That is our double bottom, and here is our retest. So this is where we're gonna enter, and we're gonna target here. We're gonna target here. This is our retest here. This is our retest, and here's our target. Remember, I did show you a pattern. Let me just draw it for you guys. It's the pattern that we're looking for. It won't be always perfect as we expect it to be, and this was gonna be our neckline. Our neckline here, this W. See, so we've seen this pattern playing out a lot. We have this pattern here, but where is happening in the middle of nowhere. So we don't take trade in the middle of nowhere. We want our first rule to be met. We want the price to be on a bullish market, exhaust, give us a bearish market, and once it's here, we put our zone. We say, okay, we expect price to touch our trend line, go up, move away from the trend line, and retest. Once it gives us this retest, we're gonna enter here, and we say we're gonna target here. That's our target, because we can see our rule is being met. So what we say, we can, okay, we remember Nasdaq, it might give us a double bottom. So it's either we make our stop loss, wild, or if we don't make our stop loss wild, we say, okay, we wait for Nasdaq to give us a touch again on a trend line. So once it touch our trend line, what do? We're gonna enter from here. Once it touch the trend line again, because here it did stop us out, then we say, okay, we expected to touch the trend line to give us this double bottom, and we're gonna go long. You see it guys? So what's happening here, we entered and price went down to stop us out. So what's gonna happen, you see we had so many wins here. What's gonna happen, someone will just gonna enter and don't put a stop loss. I know price will come back, and it continue going down. And where it's going to our weekly time frame. It's going to our weekly time frame. Even if you can see guys, we had this pattern again here. Here's the pattern. Okay, I might consider this as a touch. You know, sometimes you're just gonna want to see yourself in a trade and you're gonna enter. I might consider it as a touch and take an entry here. I might consider it as a touch, guys, you know. Okay, stop us out, and you say, we know it might give us a double bottom. We're going again here, and we know like our stop loss is either out of this channel or just below this head here. You see it, guys. Now let's just focus on current market. I didn't wanna make this video long, but I just wanna pour out everything, guys. I just wanna share everything. Okay, here's a bearish market, here's a pullback, here's a touch. So once we here, we put our zone. This is current market. This is current market. This is current market. What we do is we expecting a pullback. Like you can see, like someone can say, I was able to spot those patterns because they've already happened. Now this is happening on a current market. So we're expecting a retest and we're gonna shoot up on a current market. This is what we're expecting. Or if it doesn't give us that retest, we're expecting price to give us a double bottom and shoot up. So guys, you can see if you miss on a daily, you can wait on a 4-hour for this pattern to happen. This is what we're expecting now to come to our zone. Someone say, oh, Nasdaq is bullish, let me enter, and you enter here, you enter here, and you can see this is a strong resistance zone. Check how many times it's been tested. This is a strong resistance zone. This is a strong resistance zone. It's a strong resistance zone. From here it can go down and stop you out because you jumped in front of a train. But us, because we know, we follow our strategy, we're expecting Nasdaq to come and retest this zone on a right shoulder or come to our weekly trend line, and we're gonna go long. Okay guys, let me quickly go on 1 hour. The video is now longer than expected. Okay, we keep it simple. What we did before, we're gonna do it again. We're not doing anything new until market is showing us something that we didn't see on those other time frames. Until market is showing us something that we didn't see on those time frames. Let's go to 1 hour. Okay guys, on 1 hour I won't go back here because it's gonna be very long. It's gonna be very long, guys. Just want a touch on a trend line. Okay, I think we can just start from here. Let me see if even here, I think guys, now you are able to spot it. This is the head, impulse, right shoulder. Okay, I just wanna ask most to focus on the current market, because on 1 hour, let's check here. This is a bearish market. This is our right shoulder. This is our touch, and we say, okay, once it touch our trend line, we know on 4 hour is giving us a double bottom. So even here we have a double bottom. You can wait for price to break, retest, and you go long. See, the same pattern is still happening again. But you can see this double bottom also is a bigger double bottom, guys. And apart from that double bottom, we still have inverse head and shoulder. Even if this left shoulder here you can check this left shoulder, it was falling, and here's the touch, and this is the right shoulder whereby we make an entry, and our target is here. I'm just moving quick. I hope you guys now you are able to see it. So what I'm gonna do, guys, I will send the notes. I have notes of the strategies. I will send you the notes if you want the notes whereby you can read and backtest on your own. And if you have any questions or whatsoever, you can talk to me. I will be here to assist you. Okay, we can see here we have our left shoulder. Okay, let me do it like we did it before. Here we have our left shoulder. We put our zone, and we say price can give us a double bottom, and we see that double bottom, and here's a break, and here's our retest. But okay, 1 hour, guys, is showing us something. 1 hour is showing us something different now, because we remember even on 4 hour our head, it was a double bottom. Even now on a 1 hour we still see that double bottom, but now our right shoulder, I want us to focus on our right shoulder. Our right shoulder is another confirmation. It's giving us a falling channel. So guys, on the PDF that I have the notes of the strategy, I have everything from daily to 1 hour and everything. So guys, if you can see, we have impulse, correction, and continuation. So on a 1 hour, you see it giving us a high probability setup. This is giving us more confirmation. We can say we have this inverse head and shoulder as a reversal pattern. That is our first confirmation, and we have this double bottom. That is our second confirmation, and we have this correction falling channel as our third confirmation. So now what we do, we look inside that falling channel. Okay, we can see inside that falling channel we also have another double bottom. So this is a high probability trade. Inside that 1 hour channel we have another double bottom or another reversal pattern that's happening on a 1 hour. So now from now on we say, okay, the right shoulder on 1 hour must give us a price pattern. It must give us a falling channel. Let's see, guys. Here's our right shoulder, our left shoulder. We put our zone here. We enter here. Okay, we're expecting a falling channel, which we didn't have here. Market went and stopped us out. It went and stopped us out. Remember, on a 4 hour we said, okay, we'll wait for what? For price to come and touch the trend line again as a confirmation of a large double bottom. So even here we're gonna take a trade, and we're gonna target up here. Okay, what's gonna stop us out again? Even if you can check where this, let me remove this, we have another double bottom here. And if you can check, me personally, I will say I had that falling channel. I can say, okay, here's the falling channel towards our trend line. And remember I said on our falling channel, we look on our falling channel and we say on our falling channel, what do we want for price to break? We want a double bottom. We did have that double bottom, so definitely this one, it was gonna be a trade for me. This one, it was gonna be a trade. This one was gonna be a trade, but what, it stopped us out. Why? And here we blow our account because we don't use stop loss. Say, we know this is what price will do. We know. So you have been winning and winning. That one loss wipe all your account. Let's check here. Here's our zone, and here's our touch on the trend line. We enter. We know once we see this pattern, we don't hesitate. We just enter, because now prices were on our weekly trend line, and we say, okay, it didn't give us, it didn't went to our target. What do we expect? We expect a double bottom. Here we enter and we say our stop loss is below this head here, or our stop loss is outside this supporting trend line. So, but remember we said on 1 hour, what do we want? We want a falling channel. Let me see, do I have a falling channel? Here's our falling channel. Here is our falling channel. Here's our falling channel, and we say we're gonna look inside our falling channel. What do we want inside our falling channel? We say we want a double bottom. Do we have that double bottom? Yes. Once we see this, we're gonna go long. And what happened? Oh, my phone is even full, guys. Okay, let me quickly end this video, guys. But guys, come inbox me. I will send you the notes of everything. Even here, this is the current market. This is the current market. And I remember we took this trade yesterday. This is the current market. So from here, we took this trade yesterday. We took this trade yesterday, but we didn't have it. So from here, we might still expect price to give us that falling channel, go up, or come and give us a touch on the trend line. So guys, please don't like to share, like and subscribe. And if you need the notes, guys, let me know. Let me know, guys. Let me know. I will quickly send you the notes. I wanted to show you on our VIP. I wanted to show you that on our VIP. My phone is full now. I wanted to show you on the VIP yesterday trades. You can see, yes, that buy, because we saw that pattern.